Now, as we go abroad, we want to look at what's happening in the Middle East and more importantly, the UAE, because the UAE is an area where even though they agreed to a cut, we did not believe that they were going to follow through on what their volumes were going to look like. And so far, we've been correct. Again, November is going to be a big tell to see how much they, or if at all, address the situation. Given the increase in floating storage, it's likely they'll draw back some, but there's still opportunity to put some of this product into onshore storage that isn't followed as closely, and then just wait for things to move. So you might see production hold closer to where it is, and as they try to, again, balance those movements. And when you look at UAE adjustments, you can see that there has been more going to China as well as to a fairly stable amount into India. But the one that's going to be watched closely as well is going to be Japan, because Japan is concerned about availability of LNG in 2023. So they might try to hoard a bit more on the crude side, on the condensate side, as well as some diesel on the diesel front, to ensure that there's a certain amount of backstop in case they struggle to source additional LNG cargo. So again, they're just trying to manage their portfolio. And then the other is we're seeing a bit more of that moving through, and it's just something that will start to account for as it gets closer to the delivery point. But you can see India slowed down. A lot of that is just because we've had an adjustment in terms of value of just what is happening onshore within India. They have a lot of crude to try to digest, so you should see some of that reduce. And again, reduce to the point of just taking their contractual amounts. They're not going to opt for additional, especially at the current pricing. And then the other thing that has happened is they've reinstituted a tax on diesel exports. So again, they're trying to protect that diesel and keep as much of it as they can in country to ensure that obviously there's a good amount. So Saudi Arabia, the UAE, and Iraq boosted their crude oil shipments to China last month. Again, last month being October. The Middle East producers loaded almost 4 million barrels a day for Chinese buyers in October, with some tankers yet to reveal their destinations. Russia's been racing to identify additional customers, but since April, China's total crude imports from Russia jumped about 20% year on year, and that's what, again, the increase in Russian volume has left more GCC volumes, or including Iraq, but GCC, Gulf Cooperation Council countries. That crude has been stuck in the harbor, and that's where they're trying to again move some of that through, which is why we expect to see some cuts. Now, with that being said, the strike at Total's refiner has come to an end, but workers at BP's Rotterdam are now considering action. So it's going to be interesting to see if we get any other upheavals within the European market. Unipec bid Fortes at dated flat. Vital offered Fortes at dated plus $1.10. And then when you look at some of the other movements, Equinor reduced its price for Angola's Dahlia and Fazlor crude on the Platts window. So you're starting to see some of that pressure, where you're starting to see some of the discounts in West Africa, which is going to be important to watch. And again, another reason why we should see a drop in OSPs, or official selling prices, from the Middle Eastern countries. Equinor, then at the same time, U.S. imports of Nigerian crude climbed to a 7-week high, and we expect to see that continue to be a bit elevated, and trying to pull in as much of the distillate-heavy cargoes as possible. Now, you'll be shocked to know that China is using Malaysian crude or the Malaysian flag to hide imports. So Chinese imports of Malaysian crude oil have surged above what the country actually produces. And again, it's rebranded. So this is just it's Russian crude. So let's just go through some of the metrics. So typically, Iranian crude gets branded as Malaysian crude. So as Iran didn't care as much, and nobody really sanctioned Iranian crude as much, as it sailed under its own flag, all of a sudden Malaysian crude imports diminished. Now, as things are heating back up with Russia, you're seeing more Malaysian crude. But this is why there's been an additional surge. Because Iran has been providing those suicide drones to Russia, Europe has tightened sanctions. You've also had an increase of the Russian-Iranian crude swaps. So now, not only are you getting more Russian crude that is being flagged Malaysian, now you're getting Iran again flagged as Malaysian. So this has resulted in that surge. And it's important to talk briefly on, there has been an announcement, and in Saudi Arabia, the KSA have said that an Iranian attack is expected in the next 48 hours. Now, if you look at the issues that have been happening within Iran, as we've been discussing, with a significant amount of protests, a lot of the issues that have continued to come to pass, and without Soleimani, who the U.S. assassinated at, I think it was 2018 at this point, or 2019. All the days fly together, either the 18th, 2018 or 19th. But that has become a big component. Actually, it was 2019. That has become a big benefit because he was the key mastermind to bringing these protests under control. Now, without him spearheading it, you're seeing a bit more of an increase in protests and other types of forms of social unrest. But the IRGC and the government is going to want to show some form of strength and some show of force, which is kind of ties back into it. Also, Saudi is trying to get back within the good graces to some degree with the U.S., because after OPEC's cut, the U.S. threatened to pull military assistance and military assets out of Saudi Arabia. And this is just highlighting why it's important to have a Patriot missile barrage, as well as a Patriot missile launching systems and other protective nature. So again, that's kind of the back and forth. So that's going to be an interesting one to watch. Now, this is what we were talking about when you look at the amount of crude in the floating storage market. So when you look at Middle East, the Middle East in general, this is the most floating storage that has been there in 2022, slightly down from last week. But remember, we didn't do this last week, so you can see just how elevated it is versus historics. So Saudi Aramco may reduce the official selling price of its flagship Arabian Light crude by 35 cents a barrel month on month to Asia. According to the estimates, the OSP differential may drop to about $5.50 a barrel premium to the Oman-Dubai benchmark, compared with $5.85 for November. So it's going to be important to see where this is, because there's a lot of crude that continues to build up. And if you look at historically, there is a drop in floating storage, but instead we've had these steady builds, and now we're starting from a much higher level when you look at these underlying movements. With all that being said, Europe still needs oil, and it continues to come from the U.S. So on the 4-week rolling average, we're at about 4 million barrels a day. That is above our estimate of that 3.8 million barrel a day export. Again, it's just going to continue to be strong, especially when you look at the spreads between WTI and Brent. The spread is wide open, again, pulling as a maximum amount of crude from the U.S. going into the European markets, which we don't see stopping anytime soon. And here is another key reason when you look at the swap between Dubai and Brent, which is another reason why you're getting bigger discounts in West Africa, because West Africa prices off of dated Brent. So dated Dubai continues to get cheaper. It is now so dated Brent is now about over $8 more expensive. So that's where you're going to continue to see some of those movements. So this shift should help some of that product move from the Gulf in the Middle East. But it's important to look at this on different levels. So because of the elevated amount of floating storage, it's getting cheaper as they try to incentivize the movement, which is what we're seeing here. As dated Brent, again, because of the problems that we're seeing, it's now incentivizing additional imports from the U.S. The fact that Libya and Kazakhstan has come back to some degree, that will help cap some of those movements. But again, there's still that demand that we will see dated Brent remaining elevated. Global crude on the water still remains at a 2022 at the highest it's ever been, or seasonally adjusted basis. Obviously, still at that close to the highs for 2022. That's not going to change, just given the amount in floating storage, the amount in transit. As again, the miles per ton continue to be very much elevated, driven by what's happening with Russia. Crude oil in transit came down a bit, but as it comes down in transit, it should increase in floating storage, which we're starting to see, because as those shipments show up, that's when you see it sit offshore for a short period of time. And again, as floating transit is coming down, here you're seeing floating storage going up. And we expect this to get much closer to and continue to close the gap between now and 2021. And as you can see, the comps get easier because 2021 and 2020 were in a downward movement as of right now, where we expect to see floating storage going counter seasonal and actually continuing to increase, which is why we will hit, in our opinion, the 2021 numbers. Asian floating storage remains depressed. We actually think this will reverse, and the reason why we think it's going to reverse and go much closer to 2021 levels, not only do comps get easier with that drop, but crude supertanker crude imports are at an all-time seasonally adjusted high and at the highest point of 2022 for cargoes that are signaling China. Now they've come in and they've done a good sweep of the Middle East. They've had a pretty clean sweep of what's coming, obviously, from Malaysia, aka Iranian and Russian barrels, and then outright Russian barrels. And as these tankers show up, that's going to, again, put more product offshore and keep that floating storage elevated. You know, the other side of the equation is the independent refiners and refining capacity in general. So refining capacity has actually come down a bit. And as that comes down, again, that's going to slow down the amount of crude moving in. And that's going to put a bit more pressure on keeping product in the offshore and increasing that floating storage. West African floating storage moving back to a little bit elevated back to 2016 levels, above 2021, still below where we were in 2020, but you can still see at the higher end. And that's why we're going to continue to see some of those reductions in dated Brent. In West African pricing against dated Brent to try to keep some of those barrels moving, with the U.S. buying a bit more. U.S. product and crude exports. So gasoline exports dropped 39,000 barrels, but still above the 5-year. We expect that to remain the case. Distillate had a drop of 294,000 barrels. A lot of that is timing delay, just because we had a big surge last week. Now we're paring back a bit. It's still going to remain fairly close to slightly above the 5-year average. Propane, propylene, just based on pricing, we're going to continue to see those flows remaining at all-time highs, or at least well above the 5-year average, seasonally adjusted high levels, just because we are competitive in the international market. And then crude exports coming in at 3.9 million, still remaining very elevated, and just given based on just the differentials, there's a lot more to continue moving forward. Now, just looking at gasoline exports, as we were saying, it's going to remain above the 5-year average. We expect it to be within the cloud, but again, just at the high end of that cloud piece, and that's where we're going to continue to see those flows as Pad 3 tries to balance out its storage levels. And then when you look at distillate, we had that steep drop. We do expect to see that bounce back up and likely bounce back above the 5-year average, just because there is enough in storage and there's more production coming, which is going to, again, keep that those volumes flowing. Ethane exports still remaining at the highs. This is going to remain at these elevated levels, just given we do have that beholden buyer coming from Asia, which is going to keep those exports flowing. And then here you can see just where crude exports are versus historics. It's going to continue to set new seasonally adjusted highs. A lot of movement will continue. Then when you look at propane, propylene, again, remaining at that elevated level. We don't see that changing anytime soon, given the demand abroad, just in terms of movements, but also we are price competitive. Now, when we look at inventories in Fujairah, they continue to they shrunk again. A lot of that driven by middle distillate. Total product stocks in Fujairah came in at 21.95 million. That's a drop of 577,000 barrels. Light distillate fell 941,000 barrels to 6.354 million, falling below the 7 million barrel level for the first time since mid-September. East of Suez gasoline complex was softening amidst an easing of demand as Vietnam's gasoline demand was weakening amid a stronger U.S. dollar. India's gasoline exports in September fell 34.18% month on month to a multi-year low of 670,000 metric tons, or 4.36 million barrels. Stockpile, and again, a lot of that was to create the stockpiles ahead of the Diwali festivities and the refining turnarounds. So that, again, we believe that light distillate of storage is going to increase in Fujairah. It's the middle distillate that we don't see the same type of situation of those builds. Middle distillate fell 199,000 barrels. Then that brought us to 2.687 million barrels in storage, moved further below the 3 million barrel level. But the East of Suez gas oil complex softened amid slow spot trading. Again, just in terms of just pricing in general, strong dollar. Overall cash differentials of 10 parts per million sulfur gas oil cargoes loading the Middle East and West Coast India have been propped up by strong demand in the West and could continue to be well supported as buyers in the region seek non-Russian origin barrels. And again, that's why that key piece, that key statement is why we see that middle distillate remaining at the low end and again priced at an elevated level, which will continue to put pressure on Central Asia accumulating volume, which is why they'll likely continue to buy heavy resid. Heavy resid rose 563,000 barrels. To 12.909 million. The bunkering hub of Fujairah, IMO compliant bunker, was the bids, again, fairly soft, coming back to our commentary surrounding Masric and the movements on the shipping front. Brent time spreads remained elevated. Given where we are on the Brent on the time spread side, it's going to stay at the high end. Now that we've shifted to Jan Feb and we've had December roll off, we expect this to remain closer to that, let's call it $1.75 to about a $1.85 spread when you look at the 1 month movements. When you look at underlying flows, here you can see that Libya continues to be at the elevated side. We're at about 1.15 million barrels a day. That's something that's going to remain at that level. There's other issues that are at play. We've talked about it on Twitter. I'll try to cover a bit of it in the Econ show. And then when you look at Angola, some additional flows have moved from November to December, and Nigeria something along the same as North Sea and other types of remain elevated in terms of historics. Equinor offered Angola's Dahlia for December loading at 60 cents less than dated Brent. They also offered Pazflor loading at 60 cents less dated Brent. Vital withdrew an offer, so you're starting to see again some of those movements back and forth. They've dropped it from $77.70 to then it was put back out there at $6.50. As we've seen some of this pricing get a bit stronger, we should see those spreads get a bit weaker just to try to move volume. Vital offered 450,000 Gabon's Rabi at loading at $5 less dated Brent, and that drops from $3.90, again trying to move those volumes through. Russia pumped an average of 9.9 million barrels a day last month, with flat on September, and that's something that is probably pretty close to where it actually was, maybe a little bit weaker. But again, you're starting to see that decline, which is why, Russian cuts in the OPEC agreement, they're already more than compliant. So that's not an issue. On the Senegal side, 1 million barrels of Girasol loaded for dated Brent at $3.20. That's down from $3.60. And then a week before that, it was at $3.90. So again, trying to find that incremental buyer, bringing those prices down. And that's where we continue to see where crude shipments from the Arctic port from Russia rose in October with the first cargo sailing to China, not surprising. And that's where we continue to see additional flows coming from Russia into the Asian arena. Genscape, when you look at ARA crude, we're right at 2020 levels. So you can see that we are back to the highs of 2022 for crude in storage in Europe, which again is putting a bit of pressure. When you go back to segment one and you compare where crude storage is in general, this is again driving part of that west of Suez movements. When you look at gas oil inventories, we're now back above where we were in 2017. But again, it doesn't really matter because this is still the second lowest we've ever been. And just given the backdrop that we've highlighted, that is not changing. And the distillate side is not getting any better within the European theater. Gasoline, again, back to a seasonally adjusted all-time high. Europe is back above 2020 levels of gasoline and storage, and that's not going to change because the ARB is closed coming from Europe into the U.S., and that is all driven based on day rates and how high day rates are as it's more incentivized to move distillate cargoes. Fuel oil drifting lower, right in line with 2021 levels. There's only two periods where they were higher, and shockingly enough, it was 2020 and 2017. So we expect that to remain at the high end. But as it remains elevated and as Central Asia gets priced out of middle distillate, they will pull down more fuel oil. Singapore, here you can see that on a total stocks level, fairly normal, above above the levels from 2002, so well above the average that goes back to 2002, so almost 20 years. So that when you look at it in general, or 19 years in total, so we're still above that average. But again, it's not all equal, because when we look at light distillates, seasonally adjusted speaking, are at all-time highs, and by a very wide margin. And this is including the lack of exports from India. And that's the concern, because when you look at the fact that India wasn't exporting, holding and hoarding for Diwali, now that we're past the festival, that's going to, again, only make this much worse. Now, when you look at middle distillates is at an all-time low, seasonally adjusted, again, going back the last 19 years, to give you an idea of the problem that we are in, not only just west of Suez, but also east of Suez. And because of that pricing, there's just going to be a constant flow keeping us at these depressed levels. So then when you look at resid still remains well supplied and right around 2020 levels, well above the average. And as middle distillate drops and resid stays elevated in heavy disty, that's going to, again, price itself back into the power gen front, which we should see more movements into Central Asia. On the floating storage side, North Sea is back to 2022 highs, and just given on pricing that this will remain a bit elevated, and we should see prices come down a bit just to move some of those cargoes, and you should see some of that start getting sold into the Asian markets as well as into the the European markets as well. Then when you look at Europe floating storage back to the 2022 highs, and seasonally adjusted speaking, much higher than normal. And that's something where that timing delay, which is why when you look at Genscape and ARA, there's still more support, because that timing delay is going to keep more crude moving from offshore, onshore, and keep that elevated. So again, there's still more than enough crude in the European markets. The problem is turning it into product, so which is where we continue to see the issues. So that's what we have for you today. If you have any questions, you can find us on Twitter. I apologize, I haven't been as active on the comment section. I will try to catch up on all of that and cover any questions you may have. And again, we hope you had a great and happy and safe Halloween. And now enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.